Welcome back, Airheads. Video number 6 in our How to TA Mastering Technical Analysis series, where we focus on crypto, but this works for traditional finance as well. TA is TA, whether you're trading gold, copper, US dollar to the pound, whatever, it works the same way. Today's video is going to focus on probably the toughest thing to master in technical analysis, and that is finding the perfect entry. What is the perfect entry? What's your stop loss supposed to be? We're going to be going over several different ways to find entries and to find confluence for your trade in this video. This is video number 6 in our series. If you are just finding us on this video, hit that playlist in the description below. Start at video number 1. I promise it'll be worthwhile for you if you're trying to become a better trader. With that said, do me a favor and smash that thumbs up button, subscribe, turn on notifications. It helps the channel out. Last but not least, before we hop into it, discord.gg/Alpha Aere is our trading clan, where we post all kinds of gravy and sauce all day long, just dissecting the markets, chatting. The first 100 active members who join are going to be grandfathered into any type of paywall I do in the future. This stuff should be charging hundreds of dollars a month for it, the information I'm giving away, because other influencers do and people pay for it. It's free right now. Take advantage of it. Try me out. If you don't like it, just leave. But without further ado, let's just hop right into the video, guys. All right, guys, this first one's real simple and one of the more powerful ones. What you want to do is turn on, go up to your indicators here, turn on 4 EMAs. So you can just type it right here, 4 EMAs, and it's right there. And there's just many of them and they're all the same. So I like EMAs, SMAs work as well. The difference between SMA and EMA is the exponential moving average or the simple moving average. Simple moving average takes the entire 21, 50, 100, 200, and it applies the same weight to them. The exponential moving average takes more recent data and gives more weight to that. So I tend to like that more, especially when we're dealing with a 200 unit moving average. So here's the thing. Not only is this video going to focus on how to find entries, but this is a hybrid video because it is also a video on different trading strategies. There's a billion trading strategies out there. You got to find the ones that kind of mesh with you the best, or the better traders take them all, kind of throw them together to find confluence for their trade. So this is a hybrid video. So like I said, find the moving averages. So the 200 moving average is the longest moving average. And here's how these work. So there's SMA, simple moving average, and there's EMA, exponential moving average. Both of them are going to work. I like the exponential a little bit better, but I do tend to use both. So what that is, so simple moving average takes the total length, so the 200, the 100, the 50, the 21, and it applies equal weight. The exponential moving average adds greater weight to more recent data. On top of that, what those numbers mean, so 200 moving average, which is my red here, 100, which is like that kind of grayish color here, the 50, the white, the blue is the 21. So those are units. So 200 units or 200 candles. I'm on the 7-minute chart. So it's 200 candles on the 7-minute chart. The 100 moving average is 100 candles on this chart. If you go to the daily time frame, that's the 200 day or 200 daily candles moving average. 4-hour chart, 200 4-hour candles moving average. Now here's how this strategy works. Now, when all the moving averages, so the 100, the 50, and the 21 here cross above the 200, so when the gray, the white, the blue cross above the red, that's bullish. Price is going up, and it's going to continue to go up until those fall back below it. Now, if you would have taken an entry right here where that cross happened and you got out, let's just say where the cross went back under, and this is a 5-minute chart, by the way, but that would be a 2.5% win. And that's nothing to sneeze at, especially in this market that we're currently in, where there's not a lot of movement going on. If you would have used 1 times leverage, that's 3% win. You do that over and over and over again, you're growing your portfolio. You're growing your portfolio every single day. If you are a little bit of a better trader, you use 5 times leverage, that's a 15% win. That's nothing to sneeze at. Another way to play this is you take your entry, and then you just slowly move your stop loss up. But you see, nothing happens in a straight line, right? So I always have a stop loss, but I give myself a pretty liberal pullback until that crossover, right? But at the same time, if you play that stop loss properly, You can catch these bigger pumps out to where it starts to kind of pull back a little bit, double top, and then falls down. So maybe you get out up here. But for beginners, I would say play the crosses. Now, another thing to consider is when all the bands converge on each other like this, I would probably just wait or look elsewhere, because this is where the video number one comes into play, where that disciplines, that patience. You don't always need to be in a trade. If you're always looking to be in a trade, you're already doing it wrong. So when you get in a tight range like this, just wait, because the market will come to you, right? Just wait. Also, the thicker that these bands separate, like you're seeing here, the more the price goes up. So if you're looking for an entry and it's like super separated like this, I would almost wait. You don't want to try to, how they say you don't want to catch a falling knife. So if the price is just dropping fast, you don't want to try to catch that, because usually you get stabbed. This is like trying to catch a rocket blasting off to outer space. It's the same thing. Now, with this trading strategy on smaller time frames like this, like on the 5 minute, the 3 minute, the 1 minute, those are more scalping. So you have to really get that entry right away and then move your stop loss into the green kind of as quickly as possible. You have to take what the market is giving you on this trading strategy. Sometimes it's going to work out and it's going to run for a long time. Other times you might only be in this for a couple minutes and you may make 0.5% or you may lose 0.5%. No trading strategy is 100%, but over a long enough time period, all of these trading strategies will produce profits for you. This trading strategy requires you to babysit your trades on smaller time frames. Now, typically on larger time frames, if you get a good enough entry, you don't have to babysit it as much. You need to use stop losses, period. If you're not using stop losses, you're doing this whole thing wrong. So when you enter into a trade, like here, right, everything's crossing over, price goes up, and then guess what happens? It comes right back down. Maybe you got stomped out, but it comes back down just for a second and then kind of catches itself and runs up. So you would probably have wanted your stop loss to hit here. Maybe it did, and then you're out of the market. This is where that patience comes into play. You want to wait. So you get another cross. It crosses right here. It crosses under. You take a short. You enter, you move your stop losses down accordingly, giving yourself enough room, and then you would hit your stop loss here. Then you get the cross to the upside. You do the same thing. You just rinse and repeat. This works on any time frame. Obviously, if you play this on the daily time frame, these are not scalps, right? So if we kind of zoom way in, this is larger time frame plays. You may be in this for weeks at a time, depending on the play. So here we go. We cross below, right? We cross below. Price drops dramatically. I mean, you would have been in this trade from when they crossed below. You enter into a short here. You would have been in this for like 2, 3, 4, almost a month, right? Let's take a measured move. Here we go. So cross below right here. Let's just say you entered when they all crossed below, right? Which was like right here. So you would have been in this for, yeah, I mean, this was like a 30 day play right here. And your profits, I mean, that's 27%. And just to back test this on the daily, right? They all cross above the 200, price goes up. They all cross below the 200, price goes down. They all cross above the 200. I mean, this one would have been huge, guys. And then they cross down there. Let's take a measure move of that. So here's the cross above. There's the cross down. It's not even the top. I mean, that's 400. This is going back to the bull market. Like, imagine, right? I mean, you could have 430%. You guys know the 4-hour chart's like my favorite market indicator of which way we're headed. So we crossed above here. Not only did we do that, but that was a bull flag, but we crossed above it. And then when we crossed below it, like right here, it would have been 11%. I mean, that's huge. 50% if you're on 5 times leverage. So huge. And then it crossed below it. And then they kind of start, like I said, this is not a fun range to trade right here, which stinks because since I've made this channel, we have been in this range. But, smaller time frame scalps are still there, so you could still do that. But I don't really recommend anyone kind of trade this garbage till we get a proper range. But you see how this works. I mean, every time they cross below, price drops. Every time we cross above, price goes up. Cross above, up. Cross above, up. Cross below, down. Cross above, up, below, down. it rinse and repeat. It's over and over and over again. And here's my final thoughts on this before we move to the next one. A good trader takes all of these strategies together and builds their strategy, right? Yes, you can just use this and trade and win. You're not going to win 100% of these trades. You may get a fake out. There's going to be some volatility every now and then. But again, over a long enough time period, your win rate's going to be way higher than your loss rate. Second thing that I want to say before we go on to the next thing is, now you can dissect the markets on larger time frames. You can figure out which way the market's going to go, right? So how this can be used for entries and not just a trading strategy is, let's say you dissect the market, you're on the daily, you're on the 4 hour, the 1 hour time frame, and you say to yourself, all right, I know the market's going to go down, but where do I take an entry at? That's where you go into these smaller time frames and you look for your entries based on that crossover. That can also work on chart patterns as well, which is a good segue into this next part. So chart patterns can be used in conjunction with the moving averages in order to find an entry. So remember in the video where we talked about CVDs, we talked about that double market top, that 62,000 market top in April 2021, and then that second top in November of 2021. So we had a couple things going on here. We had that double top, or the M pattern, right? That's your double tops, typically a bearish pattern. On top of that, in our CVD video, we talked about how the CVDs, so we made higher highs, right? There's your higher high trend line. But on the CVDs, right, which talked about in 2 videos ago, looked like this. So we had a divergence. We had a bearish divergence. Couple that with this crossover on the daily chart, right? And on the 4 hour chart, it actually came earlier, but on the daily chart, we got it in January, the beginning of the year of 2022. But also, we were in a bear flag as well. So you had so many things saying, oh my God, this is the top of the market. You should have gotten out here, but really you should have gotten out to that 65,000 when that downturn started to happen, because there was bear flags and all kinds of stuff happening, right? Bear flagged out all the way down. And then we had that double top again. And it came down, Terra Luna happened. So there's a lot. But if you would have gotten out here, for example, and rolled this all the way down till they crossed to the upside, you would have probably gotten out sooner than that, given your stop loss. But this would have been this is huge, guys. This would have been 65%, right? You could have rolled that all the way down to the bottom there, because they just separated. They separated so much further as we got down to FTX, and they started to come up pretty quickly beginning of the year, this year. And I want to be clear, you don't need to be in daily plays. You could have made a lot more than 65% just playing this level at a time on smaller time ranges, smaller, 45 minutes, 7 minute, 10 minute, 5 minute. You could have made a lot more than 65%. You can use moving averages for confluence, right? Shoulder, head, shoulder, and then we dumped into kind of like a bear flag there. You turn on your moving averages, boom, there you go. And you can see crossed over. This was just a bearish downturn. It was huge. And you would have been on the winning side of this play, period. Shoulder, head, and shoulders aren't always perfect. And as a matter of fact, they're hardly ever perfect. Bear flags, bull flags, channels, a lot of these other patterns are more perfect. So let's find a bear flag here, or a bull flag. So here we have a flag on the 4 hour. Now we were in this flag for quite a while. You can zoom in, 12 minute. You can find the flags on any time frame, right? But let's stick with the 4. Actually, let's go with the 1 hour. So I found the flag on the 4 hour. I'm going to drill in on the 1 hour. So you would play these patterns like you would a tradable channel or trend lines, because they are trend lines, meaning you want to try to get your entry for a short, in this case, since it's a bear flag, at the top of this trend line. So right there would have been a good entry. Right there would have been a good entry. You turn on your moving averages. You got confluence, right? You have confluence. Now, this one dropped up here, right? And it's been under since, but you still want to take an entry because it's in a bear flag. And you can see they are separating further and further and further apart, signifying more downturns. So you enter towards the top of this trend line if you can. Stop losses accordingly. This trade you would have made 11%, huge. when you're trading bigger patterns. So, I mean, here's a ascending wedge, right? Boom. There's your ascending wedge. And we can do something like that, which typically falls to the downside, right? That's how these work. So let's say you're looking for an entry. You're in this pattern, and we were in this pattern for a while. We were in this pattern for 2 months. We were in this pattern. So what do? Well, same thing I've been talking about. You take your shorts, you move your stop losses down accordingly. You would have gotten stomped out here, entered into a long, short, long, short, long, short. Maybe you got stomped out here. Maybe you did, but in the green, in the profit, and you wait till it hits the top of that channel again, take your short, and then you're on the winning side of that trade. And look there, another bear flag, right? And then look there, another bear flag, another tradable channel for days, right? Drop there. And then, maybe you got stomped out and you just take this day off because it was just a green day up, or maybe you saw something else, right? This is just one trading strategy. But that's it. And this is still, again, a widening of those bands. On top of that too, let's say you're in this channel. Maybe you missed, all this crap, let's just say, and you want to find an entry. If you're in the middle of the channel, I always say you really don't want to take entries, but when you're on a daily time frame like this, you gotta zoom in. So if we zoom in on that daily time frame, let's do the 1 hour chart. So you can see the moving averages, right? Cross under, price goes down. Cross above, price goes up. Cross under, price goes down, up. You can see how they flow inside of this channel, right? And then eventually they kind of wind down a little bit. And usually when that happens, when they get constricted like that, like a snake, it's ready to pounce, right? And you can dial it in even further if you're looking for entries than just the hour chart as well. Remember, it's not going to always touch the bottom of that channel. So that's where stop losses come into play. So you enter into a short, and well, in this case, almost every single time it touched a channel except for this one. But you probably wouldn't have seen the channel here yet because you didn't really get 2 touches. I mean, I guess you kind of did. You would have had to redraw the channel at some point, but there's your, start of your channel, right? I mean, I guess you could do something like that. That's actually better than that. So let's go ahead and delete that. So here we go, right? There's your couple touches here. So maybe you took long there. It went up, you wrote it up, but you got to move your stop losses up, but give yourself enough room. That way, when it comes down, it can crash into your stop loss. You get out in profit. Remember, like I said, take what the market's giving you. Then you're patient. You wait for it to get to the bottom of that channel again. You enter into your long again, and then it goes up the top of channel, down. I'm just telling you, rinse and repeat. And then eventually, you're going to be on the winning side of that trade. I should say the trade of the channel. So that channel's, this channel, this upward ascending wedge breaks down. So if you play the channel like that and you use moving averages, but as well as that support and resistance of that channel for entries, you're going to be on the winning side of that trade to get that larger breakout. So now let's talk RSI strategies. So what you want to do is just indicators, make sure you have that RSI, relative strength index, favored to 2, put it on your chart. Then I want you to go into the settings here. And I want you to turn the RSI upper band to 80, the lower band to 20. And the reason I do that for crypto is because crypto is more volatile than traditional stocks. It just is. So there's 2 things I want to talk about here. The first, when crypto gets really, 80 plus, we are overbought. When we get down into the 20s or close to the 20s, right? Or close to the 80s, we are oversold. Meaning a potential for a reversal in the market is possible. That's the first thing. There's 3, I lied. The second thing is anytime, this is the simple moving average, 14 units, right? So when we're above, the price is going up. It's that simple. When we're under, price is going down. When we're above, price is going up. And look, I mean, just you can see these dotted lines on my chart here, right? I mean, just look, price is going up, both on the RSI. And when we cross under, price goes down. So that's the second thing. The third thing is you can spot divergences here. So look, there's a high and a high. So it's a lower high. But look at the price here. There's your high in the same time frame. Let's take it right there. So there was your high on the RSI. There was your high on the RSI. So you have a higher high, right, on the price. And you have a lower high on the RSI. So that is a bearish divergence, And when you're first starting off, you might need help with this, right? I mean, we have a whole Discord thing like the Alpha Aere. They have all this information in there, but we have cheat sheets, right? Bearish is when the price goes up, but whatever other indicator you're on goes down. That could be CVDs, that could be RSI, whatever. There's hidden divergences, there's bullish divergences. That's where you see a lower low on the price, but a higher low on whatever other indicator you're using. So in this case, this is a bearish divergence because the price is going up and the RSI highs are going down. And then look what happens afterwards, right? The price goes down. So let's look again at that market top, right? The 2021, again, March, April, and then November of 2021, where we hit that higher high, right? So everyone, a lot of people, inexperienced traders were like, oh my God. But the people in the know were like, uh-oh, this is not looking good, because it was a huge bearish divergence on the RSI, double top, CVDs, everything that we've talked about, right? So again, price is going up, right? We went from 62 to 69, giggity. And then here we go from, a 90 RSI. And then, we've made a higher high on price, but a lower high on the RSI. Get out of the market, right? You would have looked elsewhere. You don't want to just use one indicator. You want to put all this together for confluence. But that's how that played out. That was another indicator that 69,000 was the top of the market. Let's look at the current market structure. So we've been up only pretty much all year with little retracements, right? So on April 10th, we made that market high on the RSI, but the price continued to go up, right? So there you go. There's your trend line. Price is going up, but look at the RSI, bearish divergence. Again, this is why a lot of, at the end of the day, sometimes this can get canceled out. It doesn't always have to play out this way. Just probability wise, more often than not, it does. But it looks like we have some more downturn in us before we continue to the top side. So when we hit that 31K, it was actually like, 31.8 high? That was on a bearish divergence. That's why me personally, I exited most of my positions and entered into shorts on that candle. I cashed out a lot of Bitcoin, threw it in the stable coins. Now when I see something else, right, I can re-enter the market and I have dollar cost average my total bags a lot lower. Now that's for advanced people. I don't recommend doing that. You can also get screwed that way. I haven't yet, thankfully. So I did at 69K. So I did at 42K, Terra Luna collapse. So it's just multiplying your bags. And again, you don't always, that brings me to another point. You do not always need to trade futures. You don't have to trade futures at all. And when I say take a long or a short, that could mean you exit a bag that you're holding, right? If I say go short on Bitcoin or, do your own TA, whatever, not a financial advice channel, doesn't mean you have to take a short position. Just pull your Bitcoin, put it in the stable coins, wait for that price to retract, buy it in cheaper. You have more Bitcoin now. Or if I call out a play or you see something on Dogecoin or whatever, you don't have to short it or long it. You can just buy it, right? And then exit when it's at that top. If that makes sense. Putting all these strategies together, right? This is that same channel, same RSI trend, the bearish divergence. So, price again, trending upwards. 4-hour chart, you can see where it crosses over, goes down, crosses under, goes up, crosses over, goes down. We're trading within the channel. This is putting all the strategies we talked about so far in this video together, right? So as long as you keep trading in this channel, keep using the moving averages as confluence, the RSI as confluence, you're going to be on the winning side of this trade, whether it breaks up or down. Most of the time, these ascending wedges like this break to the downside, but that doesn't mean every time. So RSI is a very popular and powerful tool for day traders, for scalpers, for just anyone just analyzing the market. It can help you spot divergences like the top did. It can help you figure out which way the price is going. Again, on the 4-hour chart, if the price crosses above the yellow SMA, price is going up. When it crosses under, price is going down. So it can be confluence to finding entries. This can be used on the monthly, the weekly, the daily, the 30-minute, hour, the 7-minute time frame, right? If you're looking for entries, if you're going to enter into a long, or if you want to enter into a short position, right? And you're going to enter in, let's say here, like you're thinking you want to enter into a short position here. I would probably think twice about that, or I would try to, look somewhere else maybe to try to find confluence for your trade. Because if you're trying to enter into a short here, I mean, it's separating from the simple moving average. So if you're like, the price is coming down, right? And it starts going up a little bit or whatever, and something in your head says to go short, you might want to think twice about that, because it probably wouldn't be a good entry, because it looks like it still has legs to go up. I would wait till it starts to come underneath that simple moving average, couple that with the trend lines, with the RSI, the EMAs, SMAs, put it all together to build confluence in your trading. But that is how RSI can be used to spot entries, right? Above bullish, below bearish. Switch between the different time frames. Again, don't get tunnel vision. Check all the time frames. Drill in to find your entries. So if you know the market's in a downturn, you're on the 4 hour, you're in a bull flag or a bear flag, drill down tighter to find your entries. Next thing I want to talk about is support and resistance trading. Finding entries based off of support and resistance. And spoiler alert, oftentimes these line up with everything else we've been talking about in this video, like trend lines, RSI, being oversold, undersold, et cetera, et cetera. So you can use liquidity to find support and resistance. So right now, 29,600 is the closest level of resistance that we see. The closest level, and we might actually run up and touch this now, and you're going to see how it's going to, unless this gets pulled and the momentum is so strong, we're going to bounce to the downside off of this. Maybe we come down, to 29.4, 29.3, 29.2, and then really the thickest on here is 29,000. So the best way to do entries, in my opinion, is first of all to tie everything together. But if I had to pick one of them that was the best, it's this liquidity. These liquidity levels here should act as your entries, or act as an alert to find an entry. So if we hit 29,600 and that liquidity stays there, which it already looks like it's being pulled, it's not being filled. It looks like someone's pulling it. So you can see how it's like super dark, getting a little bit lighter here. It looks like, but still strong. So we should, unless it gets pulled, bounce to the downside off of this. So this might be a good place to look for a short. You want to go to your charts and see, what it's telling you. Do we have a bearish or a bullish divergence? It looks like it's a higher high on the RSI right now on the 7-minute chart anyways. We're above the simple moving average. So we'll have to see. So 29.6 is right around here, right? Market, 29.6. Boom, there you go. So when you come up to it, you need to look potentially for a short. I don't mean take a short there, but you have to make sure we don't crash through it. And then you probably want to look for a short, because it's probably going to come down to the downside. But you can see on the 7-minute chart, we're starting to cross above, right? The 21 came up, but not the 50 or the 100 yet. So you have to kind of just be patient here and wait and watch and see what's going to happen. So that's pretty much what I do. So I figure out where the thicker levels of liquidity is, right? So 29.6, 29,850, right? Above us, and then 30,000. So 29.6, want to find 29,850, right? Right about there. And do Alt H for horizontal line. And then it was 30,000, right? Right there, Alt H. And then I try to find the levels below us, right? So we got below us 29.3, 250, 200, right? So 29.50, Alt H, 29.200, Alt H, and then 29.050, I think it was, and then 2900. So 29.50 and 2900-ish. So you need to know these are potential areas of entry for you locally, based off of support and resistance, based off of order books. You got to remember, all these orders below us are buy orders. All these orders above us are sell orders. So if we crash into this 29,600, unless they get pulled, we're going to come down, period. Unless the momentum is so strong that we crash through it. Here's the other thing. So you need to stay up on liquidity, because it can be moved, it can be pulled, something can kind of come in. A couple days ago when we had that big run up, it was foreshadowed. Everyone was trying to find a reason why, but a ton of liquidity came in a couple $100 above us. And I said, we're going up, taking along. And we did. So I'm not saying you have to do this, but you need to stay up on liquidity. You need to have everything pulled up. You don't need 3 or 4 or 5 monitors. You can have one monitor, but you need to be able to click between them. You need to constantly be up on where it sits on whatever coin you're trading. This gets harder and harder with altcoins because once you start getting down the list, a lot of these liquidity programs don't chart them. But the point is, these thick lines are support and resistance. If it's above us, it's resistance, meaning those are sell orders. If it's below us, it's support, meaning they are buy orders. The thicker, the more orders are at that level, the tougher it is going to be to crash through it. So you should, in theory, look for entries, not just blindly take one, unless it's really strong and we have a history, which we do for 30,000, we do for 29,000. You want to just have it set off an alert and say, hey, I need to look for a short. When we hit 29,600, hey, I need to look for a short. This is where that patience and discipline comes into play. I'm going to be alluding to that throughout this entire series, because if you don't have everything I talked about in video 1, if you don't have the expectations, the patience, the discipline, you're going to fail. Because here's what's going to happen. You can see it happen in live here. There's orders come in. It's a 73 Bitcoin at 29,500, and then it gets pulled, and they're going to put them in again. It's going to get pulled. That's shenanigans going on. They're not being liquidated. We're not filling those orders. Those orders are not being filled. It's just people just playing games, right? You can see it down here, orders being pulled. Up here, orders come and go often. So you need to watch it because you can get spoofed orders or fake orders. So people trying to manipulate the market. 29,600 looks pretty strong. It's staying there, but as we go up to that price, you might see those orders get pulled, where you would say to yourself, we're approaching 29,600, I should look for a short. But guess what? Those orders disappear and we keep continuing up. So trading's not easy. It's time consuming. If it was easy, everyone would be making money, and 98% of people wouldn't lose money, right? Like we talked about in the first video, expectations. This is time consuming. It's not hard. It is a job. It's fun. I love it. It beats sitting in a cubicle for 8-9 hours a day, right? Like I mentioned, this strategy is tough on altcoins where you can't find a liquidity chart for them. Bookmap has a lot of alts, but not all of them. So let's just take a look real quick. It has a lot. I mean, most of them, I would say. On Binance, actually, it looks like it does have all of them. But if you can't find your altcoin on there, you probably shouldn't be trading it in the first place because it's super volatile. And when I say trading, I mean leverage trading. I don't mean taking a spot position on it. So put it all together, right? So we have our liquidity levels on there charted, right? The red lines. We have our trend, which is the white lines there. We're in a descending wedge pattern or a downward channel, whatever you want to call it. We have our RSI on here. 7-minute chart. You have multiple confluence vectors to find entries in your trades. So that being said, this can work on any indicator out there. You don't have to use indicators I use. I use other indicators. For example, Market Cipher A, paid indicator. There's a free version. If you just type in VMC, there it is right there. You want Cipher A and B thrown on your charts. Favorite them. But the yellow is continuation. These SMA bands, see all these multiple bands here, are smaller, simple moving average bands. So when they kind of pinch like this and turn blue, that's bullish. When they pinch like this and turn gray, that is bearish. So when they pinch and turn short, when they pinch and turn blue, long. So, and then you just got confluence with these symbols on here. This blue is a reversal symbol. If you need to know what these symbols mean, what do? You Google it. Market Cipher A symbols. Right here, just click on it. There's your symbols. I'm just showing you examples. So Market Cipher, let's do Lux Algo, right? Boom. There you go. So this tells you a lot more, and I don't want to dive into Lux Algo quite yet, but you can see change of structures, break of structures, the BOS here, a lot going on. You can see liquidity levels on the chart, fair value gaps. You do overlays here. This changes the colors of the candles. When they're red, it's a downturn. When they're green, it's bullish. When they're I guess that's a purplish color, again, colorblind. That's just like a neutral holding pattern. So it's just finding multiple confluences for your trade. Greens, you would take entry, not just based off of the colors here. There's entry and exit signals. I don't recommend going off of those. Maybe you have luck. In most cases, you don't. You can get false entry signals, especially on smaller time frames. In larger time frames, not as much. Like this, this is a saying take a long, saying take a short, saying take a long. So in all these cases, this case it didn't work out. You would have gotten stomped out. That's what I'm talking about. So it wanted you to take a long here, price went down. So in smaller time frames, it doesn't work as good. Maybe you want MACD, right? So throw on MACD. A lot of people use this. Boom, right there. When we're up running green, or exactly gray and white, bullish, right? You take your entry on the crossover, set your stop losses accordingly, et cetera, et cetera. Stokes and RSIs are on there as well. So, you just have to tailor all the strategies I'm telling you to your own. Market Cipher B or VMC Cipher B, you can spot divergences, bullish divergence, you got money flow, you got VWAP coming up. So all this stuff can use as confluence in your trades. I feel like I'm rambling now. I think I got my point across in this video. I will continue to expand upon this and more in the future. But I think we got you quite a few good ways to look for entries. I mean, we talked about using liquidity to find support and resistance for entries, channels, RSI, chart pattern entries, EMA, SMA strategies, and throw it all together, throw all the stuff in the previous videos that we've gone over. And in the forthcoming videos, we're going to continue to build off of this and make more and more different entry strategies, different trading strategies. We're going to hone in on some of them. But I think this is a good place to start, a good place to back test, a good place to test. Just remember the first video always. Watch it again if you need to. Have your expectations. You're not going to be a millionaire overnight. You need to put some time, some effort into this and have that patience and discipline. You don't always need to be in a trade, and you don't always need to trade futures. You can do spot plays or one-time leverage plays. Just know that. That's it. That's all I got, guys. Hope you enjoyed the video. Hope you learned something. I hope at least you can take one thing away from this. I'm sure everybody can. If you let me know down below what you want to see in the next video. I don't know what to do yet. I haven't thought about it, but we definitely will get one out in the days ahead. So appreciate you guys. Like, comment, subscribe. More importantly than that, hop in Discord because we're talking all day long about this stuff. Appreciate you guys. Later.